Hello people, welcome back to Fantastic. In today's video, we are going to learn about a very interesting and very unavoidable research factor in a particular stock. So if you are an investor investing into a particular stock, you should not invest without checking this factor into a particular or any stock, and that factor is the promoter stake. So we are going to study and understand this promoter stakes, and obviously following the tradition of Fantastic, we are not going to go into definitions. We'll understand these with simple examples. So now without further ado, let's just dive into it. Do not forget to wait for a small tip at the end of the video. So first of all, let's understand this promoter concept, or who is a promoter particularly called. Let's take an example. Suppose I start a company with a capital of 1 crore rupees, and down the line the profit starts to come in, there is progress in the company, and in 5 years the size of the company becomes 10 crore rupees. But now I decide to expand my business more. So what will I do in this? I'll need more capital. First of all, I will try and approach certain investors who can invest into my company, and in return I'll give them the percentage of share, or ownership of the company, or the stake, which is called stake of the company, into my business. So suppose I want to raise 5 crore rupees and I give up 50% of the stake of the company. So now 50% of the company is with me, 50% stake is with me, and the remaining 50% goes to the public shareholders or the investors in proportion to the investment they have done in the business. So now what happens, being a founder member and being the major shareholder, I now will be considered as the promoter of the company. So some of you might be wondering, where do I check this particular promoter stake and how can I know which promoter is holding what stake? So don't worry, I'll be showing you that as well, how to check it. But before that, let's understand the importance of why or how this promoter stake impacts the company. So let's take the same example for it, where I am holding 50% of the shares or 50% stake, and the remaining 50% is with the public shareholders. So now if the company is making more and more earnings and they decide to give out the profits as dividends, I'll be the one who will be having majority profits or majority dividends, having the majority share. So I'll try and make more and more involvement and engagement in business, and obviously try to make for the company to make more and more profits. So let's assume in this case only for some random reason, my stake in the company comes down to 10%, which was 50% earlier. So at this point now, my engagement or involvement might not be to that level which was when it was 50%. So basically, higher the promoter stake defines higher the involvement of the promoter in the company or the business they had invested in. You also need to keep in mind that it does not always mean that higher the stake, better the firm, because higher involvement in the company doesn't always mean profits, but it should be one of the various parameters or important parameters to consider while selecting a particular company going for a higher promoter stake company. Let's just assume there is company A, there is company B, both are with the same sector, with same financial performances, but in company A the promoter stake is higher, company B's promoter stake might not be higher compared to the A. So I am just trying and suggesting that you might think to consider company A on priority before company B, because the promoter stake is higher in that. So I'll be showing you to see this on bscindia.com website. So come on the homepage of bscindia.com, enter the security name over here, whichever holding you want to check. So I'll be taking an example of Adani Enterprises over here. So I'll type the name of Adani Enterprises Limited, and here I get Adani Enterprises, the details of that. So now scroll down over here, come to the shareholding pattern option. So if you click on this, you will get an overview of the shareholding pattern. The arrow over here, if you click on this, it will show you the details of that. So if you click on this and the new page comes up, if you scroll down, you can see this tabular column which shows you the details of it. So the promoter and promoter group, the number of holdings they have, the amount or number of shares that they are holding, percentage wise what is the share that they are holding. Out of the 100%, 74.92 is with promoters. The number of shares comes to this much, and then out of those over here you can see number of shares pledged or otherwise encumbered. So basically these are the number of shares which have been pledged against the total number of shares that they are holding. So out of the total number of shares, this number of shares are actually percentage wise 20.63%. So 20.63% of the holdings that promoter are holding is actually being pledged in this case. So we studied that higher the stake of the promoter in the company means a good sign, as a good sign, but why pledging shares or the pledged shares can have a negative impact in any kind of case, let's just understand that. So pledging, first of all, basically means pledging a thing is basically giving up it as a security. So if you're taking a loan for a particular thing, you need funds for that, you need to give up a certain security, or you need to give up a, in simple words, I think you can also say a guarantee which you give to them. If you are defaulting the loan, then they can sell that off to recover that particular loan they have given to you. So giving up a particular security or asset is actually called pledging. So promoters can pledge their shares to raise more and more funds. So they can do it for, the promoter can pledge their shares for raising funds for personal needs, or they can also do it for raising more funds for the company. So for example, let's continuing the same example, I am holding 50% of the stake, the valuation of the 50% is 5 crore rupees. Now I need some funds for more, some kind of personal needs. So what I can do in this case is I can sell up more of the stake which I am holding. Out of that 50%, I can sell up more. But in this first option, when I sell more stakes, this might have a negative impact in the mind of the shareholders. Like, why is the promoter giving up the stake of the company? Is there something wrong? These kind of perceptions might come up, and which will have negative impact in the mind of shareholders, which will have in turn negative impact eventually on the price of the stock as well. Or even if I sell it now, in future I decide to buy it again, I might not get at the same price which I am holding right now. In the future, the prices of the particular stock price might change. So that is also a risk. So I decide to pledge my shares and avail a loan against it. So in that case also, being shares being a very volatile instrument, what happens is I will not get the full amount of loan which I pledge against. So even if I give up out of the 5 crores, I give up 2 crore amount of shares for loan, I will only get 1 crore rupees as a loan against the 2 crore amount of valuation of shares, because shares are a very volatile instrument in the market. So this is actually where the treacherous trap starts. Let's understand how. So now you have raised funds against by pledging your own shares. So you need to announce it publicly as well, because being a public company, it is mandatory to do so. And this will also have an eventually negative impact on the share prices of the company. So the share prices of the company might start declining again. And parallelly, what has happened, these valuation of shares where it starts declining in the market, this also you have given as a security or as a collateral to the bank as a security for the loan you have taken. So the 2 crore valuation of share which you had given as a security now doesn't remain 2 crore, because in the market the valuation has decreased. So now the bank will ask to add up more security. So you might have to add up more shares, pledge more shares to give up. And if you pledge more shares, that will again have eventually negative impact on the share prices, and it will again start declining. So this harsh cycle will not end until and unless you free up your pledged shares from the loan which you have taken against it. There are actually many examples where businesses have wound up or totally come to an end because of this pledge shares, like Jet Airways or Anil Dhirubhai Ambani Group or Tree House or SL Group and many more. So basically try to avoid such kind of companies where there are high pledge shares, or even in some cases, in very few cases, if you think the other parameters of the company are very, very good, or the company is very financially sound, so you can ignore a pledge share which is between or below 5 to 10%. But any amount of pledge share which are above 10% is actually advised to be strictly avoided. So I hope you have understood the concept of this promoter stakes and how it is important to, why it is important to consider and see. So one more thing, like I said, I would be adding and giving a tip to you to add up. So basically all the insider news whichever is there in a company, first of all the insider news comes to the promoter before it goes out in the public. So whenever you see a promoter increasing their stake in the company, consider it as a sign that in the future the stock prices of the company might be growing very well. So always choose companies or invest to choose in those companies where the promoters are very confident about the growth of the company, or at least increasing their stakes in the company, or maintaining it stable and not decreasing it at least. So in short, just look out for what the promoter has, how the promoter is invested in the company, what intentions he or she has with the company, like what kind of involvement or engagement is there, or what kind of intentions they have with the particular stake they have been holding in the particular company they are invested in. So if you have not yet, do subscribe to the channel and try and encourage us more and more to bring such kind of topics to you. And do like the video if you have liked the content, comment for any kind of feedback or any suggestions, and see you in the next one. Did you know Investors consider Nifty 50 stocks as standard quality stocks to invest. However, there are many examples of the stocks which were constituents of Nifty in the past, but now they are either bankrupt or on the edge of bankruptcy, like Arcom, Rpower, Suzlon, Yes Bank. It was largely due to pledge shares, so be cautious while investing in companies with high pledge shares even though they are constituents of the index.